Are you tired of constantly monitoring your investments and feeling unsure about your financial future? Let's cut through the noise and find out which Vanguard ETFs are worth your hard-earned money for a stress-free long-term investment strategy. In this video, I'll show you the top 4 Vanguard ETFs you should consider buying and holding forever. I'll show you how much you can earn from a $10,000 investment in each of these ETFs. At the end of this video, I'll show you and John a Vanguard ETF that has the potential to turn this $10,000 investment into a valuation close to $2 million while paying monthly dividends of $45,073. But first, let's explore why Vanguard ETFs should be your next long-hold strategy. Vanguard is renowned for its investor-first approach, low expense ratios, and a strong track record of performance, which translates into higher net returns for investors as less of their money is eaten up by fees. Their philosophy is rooted in providing diversified, low-cost investment options that maximize returns over the long term. Vanguard ETFs are particularly appealing because they combine the flexibility of trading on the stock market with the benefits of diversification inherent in mutual funds. They're designed to replicate the performance of specific market indexes, offering investors a way to gain broad exposure to various segments of the market. The transparency and cost efficiency of Vanguard ETFs make them a preferred choice for both new and experienced investors. This cost efficiency combined with their historical performance makes Vanguard ETFs a compelling option for anyone looking to build a solid, long-term investment portfolio. Now, let's start with the list of Vanguard ETFs ranked based on their potential to grow $10,000 into the highest returns over the long term. Starting at number 4, we have Vanguard Growth Index Fund ETF shares with ticker symbol VUG. This ETF is an excellent choice for investors seeking long-term capital appreciation. This ETF focuses on large-cap growth stocks, making it a solid cornerstone for any portfolio. VUG's dividend metrics show a mixed but promising future, with a dividend yield of 0.53% and a dividend growth rate of 9.59%. While its 5-year CAGR of 0.48% may seem modest, its 10-year CAGR stands at 4.84%, highlighting its potential for long-term growth. With an expense ratio of just 0.04%, VUG is highly cost-effective, ensuring that more of your investment goes towards growth rather than fees. The ETF is heavily weighted in technology, which makes up 50.8% of its portfolio, followed by significant holdings in communication, consumer cyclical, and healthcare sectors. The top 10 holdings, which include giants like Microsoft Corporation, Apple, and Nvidia Corporation, account for 60.04% of the fund, providing robust exposure to some of the market's most influential companies. Let's see how John's investment, with a principal of $10,000 in VUG, performs. In the first year, the investment would grow to $11,424. At the 10-year mark, it has the potential to be valued at $37,315. By the end of 20 years, the portfolio could be worth $136,645. Finally, after 30 years, the portfolio could reach a value of $496,671, which is significantly better than average. The strategy behind VUG is to invest in large-cap growth stocks, which are companies that are expected to grow earnings at an above-average rate compared to other large-cap stocks. The focus is on sectors that are poised for significant growth, particularly technology, communication, and consumer cyclical sectors. VUG aims to replicate the performance of the CRSP US Large Cap Growth Index, which includes companies with high growth potential based on their earnings, sales, and book value. The ETF's strategy is to provide broad exposure to large-cap growth stocks while maintaining a low-cost structure, which is achieved through Vanguard's efficient fund management and low expense ratios. This strategy is particularly effective for long-term investors who are looking to benefit from the growth of established companies in high-growth sectors. Next is an ETF that focuses on the growth powerhouse of the Russell 1000 Index, offering another layer of diversification and potential. This is the Vanguard Russell 1000 Growth Index Fund ETF shares with ticker symbol VONG. This ETF targets the top growth stocks in the Russell 1000 index. It's another stellar option for those looking to hold a diversified portfolio with a growth focus. VONG's dividend yield stands at 0.66%, with a 10-year CAGR of 6.24%, making it a reliable source of income growth. VONG's holdings are diversified across several sectors, with a significant portion in technology, consumer cyclical, and communication sectors. The top 10 holdings, which include Microsoft Corporation, Apple, and NVIDIA Corporation, constitute 60.42% of the fund, providing substantial exposure to leading growth companies. VONG's strategy is centered around capturing the growth potential of the largest and most influential companies in the Russell 1000 index. By focusing on growth stocks, VONG invests in companies that exhibit above-average growth prospects based on various financial metrics, including earnings and revenue growth. The ETF's strategy emphasizes diversification within the growth segment, spreading investments across multiple sectors to mitigate risk while capitalizing on growth opportunities. The inclusion of top technology and consumer companies ensures that the fund is well-positioned to benefit from technological advancements and consumer trends. Let's run the VONG numbers on John's investment. In the first year, the investment would result in a total portfolio value of $11,507. After 10 years, it would be valued at $40,032. By the end of 20 years, the portfolio value would be $156,691. Finally, after 30 years, the portfolio would exceed $500,000, reaching a valuation of $592,961. Now, the next two ETFs are gems for John's investments, as they will turn his investments into more than $1 million. And remember, in the end, I'll show you and John a Vanguard ETF that has the potential to turn this $10,000 investment into a valuation close to $2 million, while paying monthly dividends of $45,073. So let's talk about the Vanguard Information Technology Index Fund ETF shares, with the ticker symbol VGT. This ETF provides exposure to the technology sector, making it an excellent option for investors looking to capitalize on the tech industry's growth. VGT's dividend yield is 0.69%, with an impressive 10-year CAGR of 14.63%, highlighting its strong potential for income growth. The ETF maintains a low expense ratio of 0.1%, ensuring cost efficiency for investors. VGT is heavily concentrated in technology stocks, which comprise 99.27% of its portfolio, with top holdings in Microsoft Corporation, Apple, and NVIDIA Corporation. These top 10 holdings account for 61.36% of the fund, ensuring significant exposure to leading tech companies. VGT replicates the performance of the MSCI U.S. Investable Market Information Technology 2550 Index. This index includes a wide range of U.S. technology companies, irrespective of their size, following the Global Industry Classification Standard. The ETF focuses on companies that are driving innovation and technological advancement, positioning itself to benefit from the growth and transformation of the tech industry. By maintaining a high concentration in technology stocks, VGT leverages the sector's potential for rapid growth and capital appreciation. The fund's strategy also involves periodic rebalancing to ensure alignment with the index, maintaining diversification within the tech sector and minimizing exposure to individual stock risks. Now, let's see how John's investment can turn into $1 million. In the first year, John's investment would result in a total portfolio value of $11,921. At the 10-year mark, it would be valued at $57,438. By the end of 20 years, the portfolio value would be $324,747. After 30 years, finally, the investment would yield a portfolio value of $1,816,688, which is close to our $2 million mark. Additionally, it would pay around $3,000 in annual dividends, all from an initial investment of just $10,000. And now the ETF topping today's list. The Vanguard S&P Small Cap 600 Value Index Fund ETF shares with the ticker symbol VIOV. This ETF focuses on small cap value stocks, offering a unique opportunity to invest in undervalued companies with significant growth potential. VIOV's dividend yield stands at 2.21% with a remarkable 10-year CAGR of 16.87%. VIOV is diversified across various sectors with significant allocations in financials, industrials, and consumer cyclical stocks. The top 10 holdings account for 8.82% of the fund, providing exposure to a broad range of small-cap companies. VIOV's strategy is centered on identifying and investing in small-cap value stocks that are trading below their intrinsic value. The ETF aims to replicate the performance of the S&P Small Cap 600 Value Index, which measures the performance of small-cap stocks with strong value characteristics. This involves selecting companies with lower price-to-book ratios, higher dividend yields, and lower price-to-earnings ratios compared to their peers. The fund's strategy focuses on broad exposure to the small-cap value segment, which has historically delivered high returns over long periods. By investing in undervalued companies with growth potential, VIOV aims to achieve significant capital appreciation while providing a steady dividend income stream. The fund's diversified approach helps mitigate risks associated with individual stocks and sectors, enhancing overall portfolio stability. Starting with an initial investment of $10,000, VIOV projects impressive growth over time for John. In the first year, the total portfolio value would be $10,856. After 10 years, it would reach $25,835. By the end of 20 years, the portfolio value would be $115,305. Finally, after 30 years, the investment would result in a portfolio value of $1,971,923, which is significantly higher than most other ETFs. As an added bonus, by the end of 30 years, this ETF is expected to pay around $540,873 in annual dividends, which translates to a monthly income of $45,073. Want to know how to reach your retirement goal quickly? Click the video on the screen to discover the fastest way to live off ETFs.